you as you decide whether or not to buy stocks right here, right now. So let's ask Adam Parker, the founder and CEO of Trivariate Research and a CNBC contributor. All right, it's good to see you. It's obviously a big week. Price action says the market's not really sure post-jobs report what exactly to do. Now, volume's obviously going to be light because Europe's closed. It's, people are off on spring break, et cetera. But nonetheless, it's a big week.
Yeah. I'm a little surprised there weren't any negative pre-releases last week. So maybe, the really egregious, things that sometimes happen as the economy slows, you get one or two big blow-ups. Maybe we dodge that. Maybe that's bullish. But, that's one. Two, I'd say the 2023 earnings numbers have come down a lot. They were down 3.6% in Q1 from where they were on January 1st. So the bar's been set lower. All 11 GIC sectors, the numbers came down, the most in energy and materials, but everywhere. So maybe the bar just got low enough, lower enough where it can be generally cleared. I mean, it's possible.
I guess it matters as to whether you think earnings have troughed or are in the process of. For Q1, earnings are expected down 5.2%. That's after a 3.2% drop in Q4 of last year. Q2 expectations are for down 4%.
Yeah.
So what am I supposed to do with that?
Numbers, I think, for the full year 2023 are about flattish now, a little bit up, less than 1% from 2022. They're probably going to be down a little bit, would be my guess. So I think the good news is more of the downward revisions are behind us than in front of us. The bad news is there's probably some more downward. I think the problem I have, and it's too early to worry about it yet, it's just the 2024 numbers that are out are for 12.5% year-over-year growth. So I think too many people have been programmed to think there's a V-shaped recovery. We've seen that in a lot of the prior downturns. But those are all accompanied by accommodative policy, fiscal stimulus, et cetera, which doesn't seem to me like the base case. So what I think is wrong right now or mispriced right now, the market's telling you, today's an exception with growth, but the market's telling you the Fed pivoted already, but the Fed isn't telling you that. So I'm worried the market's a little bit in front of the Fed in terms of, the big rally we've seen in the NASDAQ and growth stocks.
There's like a 74% chance as of today of a hike in May. As Leisman has been saying today, the jobs report was a little weaker, but not weak enough to keep the Fed from hiking. And those expectations were maybe, first it was like 25%, then they went up to 50%, and now, as I said, they're just shy of 75%.
Yeah, I'm with Leisman on that. I think just keep it really simple. The Fed's mandate is twofold, right? Full employment, stable pricing. Which one of those is dovish? So the market's pivoted and dovish, and growth stocks have had massive multiple expansion speculation. Whether you look at profitless companies or however you look at it, hyper growth stocks are up a lot. I just think the skew now is toward them being a little bit more hawkish than what's in the price. So I'm kind of negative on the market right now because I feel like, the earnings are going to come down. Maybe we dodge some of the big pre-releases. Okay, that's a data point that I've observed, but estimates have to come down. Valuation's not that compelling. There's been a lot of speculation, and the Fed's going to be more hawkish than what's in the price.
What's more compelling? What gets you to a point where you say, you know what, they've hiked, here we go, like 8 or 9 times, and they may go another time, but what makes the market more compelling to you?
I think you have to believe that, like you said, the earnings are troughing and start accelerating again, and the earliest that seems possible is at least 6 months from now. So I think it's a little bit. Yes, the equity market's anticipatory.
The market gets ahead of that, though.
Yes,
right?
It's anticipatory. We said at the same time, right? But I think it's a little bit too early.
I know
a little bit too early.
Yeah.
Yeah. All right.